Today, we're zooming into one of the most influential players in tech, Nvidia Corporation. Known for revolutionizing everything from gaming to artificial intelligence, Nvidia isn't just a tech company, it's a powerhouse behind the next generation of innovation. So, if you're interested in a deep dive on Nvidia's financials, its $50 billion stock buyback, and whether this stock is a buy or a hold, you're in the right place. First, let's set the stage. Nvidia specializes in designing high-performance graphic processing units, originally for the gaming industry. But they didn't stop there. Today, Nvidia powers sectors as diverse as automotive tech, mobile computing, and artificial intelligence. Their GPUs and system-on-a-chip units are foundational in AI and deep learning, fueling cloud computing, autonomous driving, and mobile tech. This range makes Nvidia a dominant player with a diverse market reach. It's all about high-performance, future-ready products, and they're staying ahead of the curve with rapid innovations in GPUs and SoCs. And with AI demand only growing, Nvidia's potential to expand its impact is enormous. Now let's talk numbers, because Nvidia's financial performance has been frankly off the charts. Nvidia's last quarter revenue hit $30 billion, a 15.34% increase from the previous quarter, and an astounding 122.4% growth year over year. This massive leap underscores an unrelenting demand for Nvidia's products, especially with the current AI boom. Their net income was $16.6 billion, an 11.54% increase quarter over quarter, and a jaw-dropping 168.24% year over year. This level of growth highlights Nvidia's impressive profitability and efficient cost management. Nvidia's EBITDA for the last quarter hit $18.8 billion, up 7.45% from the previous quarter, and 161.23% year over year. These numbers paint a clear picture. Nvidia's cash flow position is solid, and that strong cash flow gives it ample flexibility to reinvest in growth and innovation. While these financials are stellar, Nvidia's high price-to-earnings ratio of 66.14 might hint at overvaluation. In layman's terms, this means investors are currently paying a high price for the company's earnings, which often signifies high expectations. But it could also mean the stock might not be cheap at the moment. And on top of that, we've seen some recent insider selling, which could be a sign insiders think the stock might be reaching its peak. Let's talk about what's possibly Nvidia's boldest move yet, the $50 billion share buyback. Now, we all know Nvidia has been generating serious revenue. But $50 billion is a huge commitment. It's actually more than the cash they currently have on hand. So why go all in like this? In the last earnings call, CEO Jensen Huang made a surprising statement. He pointed out that the next generation AI models could require up to 10, 20, or even 40 times the computing power of today's systems. That's a huge claim. By pouring $50 billion into buying back shares, Nvidia signals confidence that future growth will bring in even more cash, potentially enough to keep up with the skyrocketing demand for advanced computing. If you're finding this breakdown valuable, don't forget to hit that subscribe button and give us a thumbs up. We cover Nvidia and other top stocks every week, and subscribing is the best way to stay ahead of the market. Alright, let's dig into the technicals. Nvidia's stock price currently sits up roughly 150% year to date. And yes, that's massive. But let's take a closer look at the Relative Strength Index, or RSI. Right now, the RSI of Nvidia is at 82, which is in overbought territory. This could signal that the stock might be due for a short-term pullback or correction. So if you're thinking of buying Nvidia right now, this high RSI suggests some caution. For long-term holders, this overbought status could just be a part of Nvidia's growth story. But combined with the high PE ratio, it's worth noting that the stock might not be as cheap as it once was. Now let's bring in some alternative data to get a fuller picture. Nvidia has shown an uptick in some fascinating areas. Nvidia's job postings are up 12% this quarter, hinting at expansion in key areas, especially with more AI-driven roles. Their Twitter followers are up 6%, reflecting rising public interest and positive sentiment around Nvidia's brand. Downloads for Nvidia's GeForce Now gaming platform are showing consistent engagement, which supports their leadership in gaming and streaming tech. On the flip side though, there's been a slight drop in website traffic, which could indicate a potential challenge with customer retention. While this isn't necessarily a red flag, it's worth watching as it could impact Nvidia's long-term engagement metrics. Alright, so here's the big question. What does this all mean for investors? Nvidia is a complex but exciting opportunity. Their growth metrics are extraordinary, from the massive jump in revenue and net income to that solid EBITDA showing their strong cash flow. And the $50 billion buyback plan? That just shows Nvidia's confidence in the future cash it expects to generate. But remember, the high PE ratio and insider selling are cautionary signals. And with the RSI indicating an overbought status, it's possible Nvidia's current price could be high. The company's growth prospects and innovative edge are clear, but this high valuation and technical signals means it's wise to monitor closely before making any additional investment decisions. If you're a current Nvidia shareholder, holding could allow you to benefit from long-term growth. If you're considering buying, waiting for a potential pullback might offer a better entry point. What do you think about Nvidia's $50 billion buyback plan? Do you think it's a smart move, or should Nvidia be investing the cash elsewhere? Let us know your thoughts. We love hearing from you. Until next time, and happy investing.